What's up there, YouTube? Welcome back to Beyond the 529. This time of year, I get a lot of questions from families about using a 529 plan and how it's going to impact their tax returns. So what I'm going to talk about today is what requirements you have in terms of recording your 529 transactions. I'm Mike Bink, founder and president of Equivest Financial Advisors. Equivest Financial Advisors is a full-service fiduciary wealth management firm. We help you develop comprehensive strategies to achieve all of your financial goals, from retiring to paying for college. We specialize in late-stage college planning and can help you identify strategies that will lower your cost of college by thousands of dollars. From increasing your financial aid and scholarships to identifying those schools that are going to give your student the most money, we can help you develop a plan that's going to lower your cost of college and help you protect your family's retirement. To learn more about how you can become our client and get your plan started today, please click on the button in the description below. If you're using a 529 plan and you're purely in the accumulation phase where you're just making contributions, chances are you're not going to have to do anything with your federal tax returns. Contributions to a 529 plan are not federally deductible, so you don't have to record those contributions unless you hit a certain amount. Rather, the returns that you get from your account are only reportable on your tax returns once you've actually withdrawn money from your account. When it comes to withdrawals, the rules are pretty straightforward. If you use the withdrawal for a qualified expense, you don't have to report anything on your tax returns. On the flip side, purchases that are not a qualified educational expense are considered a taxable withdrawal. So there are some requirements when recording your taxes that you need to be aware of. So for example, if you withdrew money from your 529 plan to pay for transportation costs or health insurance coverage for your student, those are non-qualified expenses and you'll have to record those on your taxes and pay taxes on the earnings for those withdrawals, as well as a 10% penalty. If you'd like more information on considerations you need to make before taking withdrawals from your 529 plan, please make sure to check out my other video, 3 Keys to Using a 529. The other scenario where you need to report something on your federal tax returns is if you've made contributions to a 529 plan that go beyond the federal gift tax exclusion. I'm recording this video in February of 2021, so the rules for 2020 currently are $15,000 allowed per individual or $30,000 of gift tax that's excluded for married couples filing jointly. There are some specific exceptions to this where you can go above those limits that I'm not going to go into today. They're a little bit more technical from a tax standpoint, so make sure to check with your tax advisor if you have any specific questions. The last thing that you want to be considerate of when using a 529 plan and actually filing your taxes comes to state taxes. Depending upon what state you live in, there's a chance that you might be eligible for some type of tax credit or tax deduction for making contributions to a 529 plan. I go into all of these benefits in one of my other videos on all of the benefits to using a 529 plan when saving for college. But for example, here in Michigan where I live, I can get a state tax deduction up to a certain amount for any contributions that I make. So you want to make sure that you check with your state guidelines. And again, talk to your tax advisor if you're wondering whether or not you need to report those on your state taxes. If you'd like help developing a plan to take advantage of all of the tax strategies that are available to you to help pay for college and lower your costs, as well as all of the other things that can be done to maximize your students' financial aid and put them in the best possible position to have little debt coming out of school and to protect your family's retirement, please make sure to click the link in the description below to learn how you can become our client, and we can help you develop a plan to cover off on all of those things and put your family in the best situation you can be. Thank you and good luck going beyond the 529.